Welcome to another episode of the Profitable Home Services Podcast. This is the podcast where we search throughout your business looking for hidden profit leaks. I don't know if we'll ever find all of them, but we are on a mission to find those silent little hidden profit leaks that might be gushing profit out of your business, or they just might be dripping profit out of your business. Our goal is to help you plug those leaks and become much more profitable. Well, today we're going to continue our search for hidden profit leaks by looking at a different part of your business, not one that we've talked about recently. And this area of your business is your income taxes. You're going, Diane, what does income taxes have to do with profit? Well, it has everything to do with profit. So for those of you who follow this program on a regular basis, you know that when I start talking about hidden profit leaks, I like to drop some money in my bucket that says proud to be profitable. So let's move forward and talk about tax planning. Tax planning is a term I think that's used way too generically. I see too many tax pros out there saying that they're doing tax planning. In reality, they're not. They might be preparing a tax projection, or they might just be doing hardly anything, if anything at all. And so we really want to clarify the word tax planning. Tax planning is when we get into the nitty gritty of your business and what your goals are, your personal goals and your business goals. And we come up with tax strategies that work to help you meet your goals while saving you money while you're doing it. And as we're recording this episode, it is fall 2024. It is full on tax planning season. We always say tax planning season starts once the kids get back to school and life kind of gets back to normal. And then it's time to start looking at where are we going to end up at the end of the year? How has your business done this year? Are you doing well? Are your profits up? Have you made enough estimated tax payments that you're not going to get a big surprise at the end of the year and get a large tax bill? Have you opened up your Profit First account and set up your tax account and put your 15% in there so that your taxes are covered? Have you done these things? Or are you like too many people that I talk to, as I talk to new people all the time? Their tax pro just tells them at the end of the year, go buy a new truck or another piece of equipment. And that's how you're going to save taxes. Just use the depreciation write-off. Well, that may or may not be a decent strategy, but a lot of times it's not. A lot of times I see home service businesses with too much equipment, too many vehicles, just because they were trying to take a tax write-off. Well, there's a lot more choices out there than just those basic types of things. But before we get into the types of strategies, I'd like to ask you is when is the last time your tax pro sat down with you and went over some tax savings ideas? I know I like to do this with my top tier clients at least a couple times a year, making sure that we are staying on track with where we think their business is going to end for the end of the year, how much their profits are, what their other goals in their life are. Is their QuickBooks file staying clean and current and up to date? Just some of those types of things so that we can talk strategy as we come into the end of the year. We know that we all must pay income tax. There's no way around it because we enjoy the services that those taxes bring. But there is nobody out there, there's no law out there that says we gotta leave a tip. Do you think the IRS deserves a tip? I don't. So let's not leave them a tip. Let's pay the least amount that we can legally pay. So let's take a few minutes and dive into your business and see if there are some ways that we could decrease your tax liability. By now, you should have made your April 15th, your June 15th, and your September 15th estimated tax payments. But what if we could find enough savings to allow you to skip that January 15th estimated tax payment? What would that do to your cash flow? How much money could you keep in your pocket or put back in your pocket that was earmarked for income tax? So let's dig into some of the tax savings ideas that might benefit your business. When I'm talking to a new client about income tax, and one of the first things we do is we dig into their entity type. Are you operating in an entity type that's serving you well, or have you outgrown that entity? Oftentimes, I see people operating their business in an entity type that they've outgrown several years ago, and they're overpaying their taxes by thousands and thousands of dollars. And so we don't want that to be the story for your business. So that's an area that can cost a lot of tax. There are certain entities that help you save on self-employment tax, and those are generally in the corporate area where we can take the net profit and allow it to not be subject to self-employment tax. There are entities that allow you to hire your spouse and write off your health insurance. But you have to be married to have a spouse, and you need to be operating as a sole proprietor or a single member LLC to make that one work well. So different entities bring different strategies and pros and cons along with them. Another area that I like to dig into is retirement planning. Too many small businesses do not have any retirement planning going on in their business. They've not given that a thought. They're too busy keeping all the balls in the air, taking care of their employees and their customers and trying to grow their business, that the retirement planning is the last thing on their mind. But unfortunately, many of the states have taken this out of your control. The states are mandating that you must have a retirement plan, and it has to be at least at the level of the state required plan. Well, I happen to work with a couple retirement planning specialists, and they assure me that those state mandated plans are not the type of plan that's going to give you, the business owner, the best write-offs. And so if we have to have a retirement plan, why don't we go with one that can be customized to fit your business and to fit your goals? So that's just a little bit in the retirement planning area that you may not have ever thought about. How about hiring your kids in your business? Do you have kids between the age of 7 on up? Or maybe it's hiring your parents if you're helping to support them or some other family member in your business. After all, the standard deduction for 2024 is $14,600 for a single person. That's a lot of money that we can shift downstream, potentially tax-free. Give an example, you've got a college student that was home for the summer and you had them working full-time for you during the summer. Potentially, the amount of money that they earned from working in your business could be taken tax-free. Now, if we took that money, we applied it towards some of their expenses for going to school, whether it's college or a trade school, whatever it might be, those are after-tax expenses that you would have paid with after-tax dollars. But by hiring them to work in your business, we've just moved an after-tax expense into a pre-tax expense. And I like it when we can do that, because that is money you were going to spend anyway. So why not move it from an after-tax to a pre-tax area if possible? Just something to think about. I know for myself, for many years, I helped support my mom, and she came and worked in my business, and that's how I helped to support her. I would have supported her anyhow because she needed the financial help. But by having her work in my business, we were able to write that off as legitimate wages and payroll because she did come to work and she did various tasks and duties around my office. So I took something that would have been an after-tax deduction or after-tax and not a deduction and moved it into a pre-tax deduction by paying her. How about utilizing the Augusta rule? Did you realize that you could rent your home to your business for up to 14 days in a year and have that rental income on your personal side be tax-free? What a great way to have a monthly board meeting or a monthly officers meeting or a monthly managers meeting or something along those lines at your home every month. by doing that, you're able to save some money on the tax side. The business takes it as a write-off, and you don't have to pick it up as income. What a great idea for something that you might already be doing at your dining room table, but not realizing you could take a tax write-off for it. Moving up to a little bit larger size business, have you ever thought about your potential need for a captive insurance company? I love this strategy because several of my clients have been able to purchase insurance by being self-insured for things that they could never have afforded to do out on the open market. We might throw in some cyber liability coverage. There's governmental happenings out there that you might want to protect your business for. There's internet things that happen that could shut your business off and with no notice. There's all these potential liabilities out there that you may or may not even be aware of. There's some key man type items if you've got a key employee working for you. There's various areas that we might be able to self-insure your business for. Your business then pays insurance premiums just like it would to any other entity or agency, but it's to your own insurance company. And you're able to grow those investments over the years. Yes, you'll pay claims as claims come up, but you'll have an investment that'll continue to grow. If you stop and think about it, anytime you come into a larger city of any sort, and you look at the largest buildings within that area, most all of them belong to insurance companies. Well, why not keep that additional money for yourself and let that investment grow over time for you? So we love captive insurance as a way to shore up your business and protect it from hidden liability out there while still saving some money on taxes. And then for those of you who are charitable minded, there are several charitable type strategies out there. In addition to just giving to your favorite nonprofit or favorite church or ministry or something along those lines, there's charitable deductions that will give you a multiple of an ROI back on your deduction. Those are really nice to find. And then there's some that go even further and give you an ROI of money coming back over a certain period of time. So there's some wonderful strategies in the charitable area. There's some great strategies in what we call the equipment rental tax strategy area. And this is where you end up becoming a investor or a piece of the larger equipment rental companies out there. You actually purchase some equipment, you're able to depreciate it or Section 179 it, take the write-off, and then you have a stream of income that comes in over the next 5 or 7 years. And so that's another great strategy that can work with helping to save you some taxes today. But what happens if you go to sell a piece of property or you're going to sell your business? We can have some humongous tax bills when something like that happens. Well, there's good news for you is that there are several different strategies that we have that can take this pain and the sting out of that and give you a nice ROI and reduce the tax burden on those capital gains taxes. Then there's strategies for those of you who are interested in the rental property market or the investment property market. We've got strategies ranging from single family properties all the way up to large syndicated or passive multifamily properties where you can take some nice big write-offs in the rental investment type world. So there's lots and lots of strategies out there that we'd love to explore with you. And these are just a few that we work with on a regular basis. Didn't want the list to get too long because then it gets overwhelming. Well, by now you're probably wondering, well, am I overpaying my taxes? I don't know. I've never really thought about it. I just write the check and pay what they tell me to pay. Well, if you would like to find out if you're overpaying your taxes, I would invite you to click the link in the show notes and reach out to me at Diane@taxcoachforyou.com or Diane@profitcoachforyou.com. Either one will get to me. And I'd love to set up a time and talk with you about your tax situation. To do that, I like to see copies of your last 2 years' tax returns. And then we'll have a conversation and I will give you an honest third-party impersonal overview of where you are with your taxes. If I can save you money on taxes, I'll tell you. And if you've got a great accountant who's doing a good job for you, I'll tell you that too. Because my goal is to make sure that you are paying the least amount of tax you can legally pay on your taxes. Now, I know this is a little bit of a difference from when I have on my profit coaching hat. Today, I have on my tax planning hat. And I want to make sure that you're making your money count. You work so hard for the money that you earn. Let's not give it away needlessly. Whether we're finding hidden profit leaks in other parts of your business, or if we're finding hidden profit leaks in the taxes that you're paying. Now, before we wrap up this episode, I'd like to offer you a free gift. I know it's not Christmas, it's not my birthday, and it may not even be your birthday. But my free gift to you is our brand new monthly net exercise. It's a little spreadsheet that we would love to gift to you. And this spreadsheet will help you to go through and identify the monthly costs that you have to pay out every single month. Things like your payroll, your rent, your utilities, your insurances, your advertising, your loan payments that you make on your vehicles and things, all those different payments that must be paid out every month. We want to know what the total of all those are, and that's called your monthly net. Once we've determined what your monthly net is, then we can look at your average sales that you have coming in, and we can determine at what point in the month have you covered your monthly net. Have you covered it at the middle of the month by the 15th? Or have you covered your monthly net by, say, the 20th of the month? If, let's say, in this example, we've covered our monthly net by the 20th of the month, all of our monthly costs have been covered. That means the last 10 days of the month, everything we do goes purely to profit. Now, how would you like that for a KPI? We know that we can always cover our monthly net by the 20th. And then we start working backwards. Well, what if we could cover it by the 19th? And then the 18th? And then the 17th? And we start backing it up because we're saving money in other areas. We're plugging other profit leaks. We've got our top line revenue working the way it's supposed to. And now you've got more days in the month to bring in profits. What a concept. So we'd like to give this to you. If you'll check the show notes, you will see a link to our monthly net little worksheet. We'd just love for you to have that. And please give us some feedback. If you've got questions, reach out, let us know. I'd love to answer any questions that you have, help you work through this. Because I think it's extremely important for every home service business to know at what point in the month have we covered that monthly net. That is a big question, and I've not come across anybody so far that knows that magic date right up front before they've decided to work with me. Well, thank you for joining us today on this shortened episode of the Profitable Home Services podcast. We all know it's not how much you make that's important, but it's how much you keep. That is the really important numbers. What is that bottom line profit? For those of you who are using the profit first concepts, have you been funding your profit account, your tax account, your other accounts, whatever they might be? It's so important to stay up on that and keep working that on a weekly basis as we go throughout the year. Anyhow, have a great week. Thank you again for joining me today on the Profitable Home Services podcast, and I will catch you on the next episode.